All right, hello everyone, and welcome to today's live market discussion with myself, Greta Wall, and Derrick Oldensmith. Derrick is the leader of T3 Live's Pro Desk virtual trading floor and the head trader over at T3 Trading Group. Derrick, I know you're busy with a big trading day as we get ready for a big trading week, but how's your day going so far today?
Okay. It's been a little bit slower and a little bit choppier today than some of the price action we've had the last couple of weeks. The price action overall in this market has been fantastic, I think, for 2 weeks plus. But coming into today, at this point we had about a 5% correction in the S&P, about a 9% correction in the NASDAQ. The NASDAQ got very oversold. The IWM held in, actually got overbought. So right now the market seems to continue to be satisfying some of the downside extension with the Qs and some of the upside extension with the IWM. So kind of the game plan coming into today was to actually not be too aggressive, to take a little bit of a step back and let this market digest the rotation that it's had a little bit further, which can enable us to reset up the market, reset up for new, bigger, better trades. And that'll happen, obviously, as we're coming into some really major events this week.
All right, so let's get into that. It is a huge trading week, kind of like, major Super Bowl week for us here in the market. I mean, you're getting earnings, major earnings, a Fed meeting, a jobs report, like all of the things you could ever wish for when it comes to catalysts for the market. Here's a look at positions that Derrick Oldensmith is currently holding. Again, he is a professional trader with T3 Trading Group, professional prop trader. All right, so like I said, major week for traders. We get Mag 7 earnings, key economic data coming out this week, and then the Fed meeting as well. Let's start off talking about earnings, okay? So the key earnings this week, there's a lot of them, but we're getting Microsoft, AMD, Starbucks, Pinterest, a bunch of other names tomorrow, but those are kind of the highlights. And Wednesday, some of the bigger names are Meta and Boeing. And Thursday, Apple, Amazon, Intel, Coinbase, of course, hundreds more on all three of those days, more today, some on Friday as well. Derrick, what is your big focus for the Mag 7 earnings this week? And if you want to share your screen, talk through any charts, we can do that as well.
Sure. So if you remember a week ago when we spoke, we were coming into the Google earnings report, and some of the Qs in the Mag 7 names had already started to pull back a little bit. It wasn't too big of a pullback. And what I had mentioned a week ago coming into the Google report was the fact that where these stocks are currently trading, it's been such a big move that they're just so elevated that a good earnings report is not going to be good enough. An inline report's not going to be good enough. These reports are going to have to be above and beyond fantastic out of the Mag 7 in order for those stocks and for the Qs to continue to go higher. And we also said that I think that a real big thing that the market's going to start looking for is the CapEx spending on AI and when and how much that return will actually be. And lo and behold, the Google report hits. The Google report was good. It really was good. I mean, I don't think that you could look at that Google report and say it wasn't good. YouTube numbers were a small miss. Every other number beat expectations. It was a really solid report. Yet Google sold off really big over the course of the next few days after that earnings report. And to some degree, it acted as a catalyst for further selling in the NASDAQ, further selling in the Mag 7, and a catalyst to bring us fully down to a near market correction for the Qs. But I think that Mag 7 on average is down like 12, 13% or something from their highs. So that was that exact expectation that we had, and it played out perfectly, albeit maybe a little bit faster and earlier than I might have expected it to. But now that the NASDAQ has pulled back 9%, and we come into the rest of the earnings reports, the landscape has changed. So I think that the bar for these stocks to move higher in their earnings report is not as high as it was back when the stocks were significantly higher. I think we've got Microsoft tomorrow. Could just use that as an example. What Microsoft just a few weeks ago was trading at almost $470. It's a big move up into the report. And I'm saying that report's going to have to be absolutely excellent, absolutely stellar for Microsoft to go higher. Now it's at 420. So it's pulled back $50 into the report. So the bar for Microsoft to move up on its report has now become less. So we'll see. I'm a little bit more. I was pretty bearish just a week plus ago, particularly on the Qs, particularly on Mag 7 coming into that Google report. I am still actually on the bear side for those companies, but absolutely at the same time, I would describe myself as more neutral. So we'll see what the numbers look like. I've been saying it. You can never count out these Mag 7 companies. They just have so much cash on hand. There's so many things that they can do to increase their stock price, increase buybacks, do whatever they need to do to hold the stock up. But I've been looking at AI now, and I've been likening it to, I think the perfect example is what happened with Meta, with Facebook. When Facebook changed their name to Meta, they said, all right, we're going all in on the on the metaverse. We're going all in on the VR, virtual reality goggles. We're going to spend and spend and spend. And it led to a huge decline in the stock for Meta because the market was like, why are you spending all of this money? We'd rather you return it to cash, to shareholders or whatever. Why are you spending all this money when there's no revenue in sight for any of this stuff? And it seems like a similar buildup around AI where they're just spending and spending and spending. And the question is, when's the revenue going to hit for these stocks? And it's certainly to be determined. They're still in the build out stage of this. But I think that at a certain point, after such a big move for these names, that the market could lose patience for it. And, obviously we'll see what happens. We'll see if the rotation can continue. But that's where my head's at this point.
Of the four Mag 7 names reporting this week, do you have a favorite setup that you're looking at it personally?
So I don't have any setups for any of them going into the report because I never know what the report is going to be, and even if I knew what the report was going to be, you can't even know what the reaction is going to be. So I generally tend to trade these stocks more after their reports than before their reports. I think I even said in the morning meeting today, like any of these companies that are not reporting, we should generally avoid between now and the report. Let the dust settle on those reports a little bit. Trade them after hours that day. There could be a lot of opportunity to do that. More from like a fundamental thesis perspective, Apple I think really stands to benefit regardless of whether AI pans out or not. That's how they've set themselves up. Apple is not spending billions and billions of dollars on AI infrastructure development in the same way that Microsoft and NVIDIA and Meta are, but they're going to still stand to benefit from it if it works, because they're just going to say, all right, whoever the winner is, whoever's got the best product, whether it's, Chat GPT or whether it's Gemini from Google or whatever it is, we'll just utilize that with our phones and let the user decide which AI they actually prefer for themselves. So if AI works, Apple will benefit. If AI doesn't work, it's not really going to hurt them because they didn't spend all the money on it. So Apple is just always constantly seeming to be like the best in breed stock, always brilliant decisions from management. And I think that this is just another one of them. Into this report in particular, it's hard to say. We'll see what the phone sales look like. Obviously, that's going to be a big thing. But I always like Apple, and I'm always partial towards Microsoft, to be honest. Microsoft certainly has the issue of the potential overspend on AI if it doesn't come together, but it's just such a great company. I'm such a big fan. So we'll see how it goes.
Yeah. Speaking of Microsoft, it's not something we'll see in this earnings report, the impact of the CrowdStrike meltdown and Microsoft shutdown. Again, we won't get any impact of that in this report, but do you think there's more eyes on Microsoft because of all of that happened in the past few weeks?
I think it's more of a CrowdStrike problem than it is a Microsoft problem, is everything that I'm understanding from it. Mm-hmm. It's a big problem for CrowdStrike. They cost a lot of people a lot of time and a lot of money. There was a lot of angry individuals who were stranded at airports who couldn't get to the places that they need to be. It was a disaster for CrowdStrike. A lot of people were immediately calling and are still calling for a buy the dip in CrowdStrike. I think that you could take cute little downside extension shorts. I do think that there will be bounces over time. The stock's still pretty extended to the downside even right now. But I think that this is actually a very fundamental change for CrowdStrike, and it opens up a lot of opportunity for some of the other players that are in the space, like a Sentinel 1 symbol S, which I personally have a position in for disclosure purposes.
All right. Of the names reporting this week, I think AMD is a little bit interesting. We're about a month away from the NVIDIA report, but AMD is another, of course, large chip maker. Do you expect any, like after AMD reports tomorrow, and can that give anyone a preview of what might be to come for NVIDIA, or do you think their businesses are just totally different?
I think it'll give a preview, and I think it'll move the other semis, and I think it'll move NVIDIA. But with that said, AMD hasn't performed in the way that NVIDIA has. It didn't break out on that last leg in the same way that NVIDIA has, and it's also had a massive pullback. Let's see here. If you want, I can share the screen real quick, and we can look at the chart. Let's see, present. Share screen. Share screen. Share. Weird. Last time it gave me a different opportunity. Oh, here it is. Boom. I'm not sure if this is the right chart. This is the right chart. Try this one. Did that? The browser can't. Whatever. It's not working. So I just have to talk through it.
All right.
So. Sorry, I just got filled in the position. The trading never stops. Never stops.
Yes.
The entire time we've been talking.
For everyone with us live, Derrick is talking to us and trading and all of it at the same time.
So NVIDIA has just continued to move higher pretty much all year until this recent pullback actually started in July, right? You can really see May and June, just huge continuation in NVIDIA, whereas AMD topped out in March at $230 and basically has been going sideways for April, May, and June. Tried to poke its head up a little bit in the beginning of July. It's like a failed breakout, which has now led to a breakdown. Just over the course of the last couple of weeks here, AMD has pulled back from 185 plus to under 140, and it's the year high is almost 230. So this thing's like $90, $85, $90 below its high of the year. It's pretty high on a percentage basis as well. I don't know what's that. 30% off highs, more, whereas NVIDIA continued to have that really, really big run. If NVIDIA was trading at the same place that AMD was trading, it would be trading at like $60-something, and it's literally double that price. So the performance of these stocks coming into this report throughout this calendar year are vastly, vastly different. And therefore, I think that the expectations going into the AMD report are going to be just much lower than the expectations going into the NVIDIA report. So again, it goes back to what I was talking about earlier. And there's been a very consistent theme that I've seen over the course of my trading career. If stocks have big runs higher into their earnings reports, the reports have to be stellar in order for the stock to continue. Like a good report or an inline report oftentimes is not good enough. It's also true on the other side. It's also true on the downside. If you have a stock that's super beaten up into the report and then it just reports in line, a lot of times everyone breathes a really big sigh of relief, and it actually enables that stock to be able to move higher. So when I look at AMD, it's so beaten up into this report, I can't imagine that the bar for this thing is going to be too high. So obviously we'll find out pretty soon, but as my good buddy Josh Leffler would say, bageled ahead, I would guess AMD higher on the report.
All right. Reminder for everyone who's with us live, if you have any questions you want Derrick to answer in the next 15 minutes, make sure to get them in so we can make sure to get those answered. I had a question. As the Qs pulled back, last week, we talked about that 9% drop in the Qs. We saw a major rotation into small caps, IWM. We were talking about IWM last week. Today, small caps are lower, while the NASDAQ and the S&P 500 are higher. Do you think the rotation is over and the small cap strength is done, or are we just kind of in a lull before we continue on?
I don't think that the rotation is over. I am looking for it to continue. It has been a really, really big move. So like I said, stocks tend to work and move in periods of expansion and consolidation over time. The IWM breakout was so big and so massive that it's required a couple weeks here now of price and time correction just to satisfy that massive degree of upside extension. And I've been nothing but a bull on the IWM into this move, but yet I found myself shorting it on day 3 and day 4, day 4 and day 5 of that really, really big upside move. So I don't think that the rotation is done, especially because when you think about August, which is about to begin, August is typically a seasonally weak period. August is typically one of the few months of the year that is historically characterized by market-related outflows. Right now, if you, and these numbers might have adjusted a little bit with the market pullback over the course of the last week, but basically, if you sell 100 shares of the S&P, you're selling, I think, 29 cents of the top 5 companies and 37 cents of the top 10 companies. So if money comes out of the market in August, which is what traditionally happens, by nature, that has to be heavily weighted more towards those Magnificent Seven companies, the biggest companies that are out there, which creates that sell-off. And I think in turn, it doesn't negatively impact those small caps and mid caps in the same way. They're able to maintain a bid underneath them. So I'm looking for a continuation of that rotation. What I'm a little bit uncertain about is if the continuation of that rotation happens with the Qs just continuing to sell kind of through this August period, especially also going into an election cycle, which also tends to be seasonally weak into November. Do the Qs continue to sell off there and then the IWM kind of just holds up? Or is it possible that the Qs sell off and a percentage of that money from that selling actually does get rotated into the IWM for more of IWM up, Qs down? Or is it IWM flat and Qs down? That's really kind of more of what I'm thinking at this point. But time will tell. I am still looking big picture for continuation of the rotation trade.
When it comes to the August seasonally being weak, we talk about the market dynamics that make that happen. Just explain a little more what the dynamics are typically that make a month like August a weaker month. Why is money flowing out of the market during that month in particular in general?
So it's a great question, and I don't fully know the answer, to be honest. We know that July is typically characterized by heavy inflows. The first 2 weeks in particular of July are characterized by heavy inflows, and that just has to do with it being the start of the new half of the year, basically. Why August historically has seasonal outflows, I really don't know. I'm sure that there is something structural behind it. The more I've been trading, the more I've learned over the course of the last few years. I've really learned that understanding market structure and market dynamics is just such a massively important part of the business. When I was younger in my trading career, and I still think this way, at least to some degree, my attitude toward seasonality was that it was something that I completely brushed off. I said, seasonality is silly just because, the first 2 weeks of July happen to be strong most of the time historically does not mean that it has to be strong in the first 2 weeks of this coming year of July. And that is definitely true. You never know what events can happen on the macro, on the big stage that can overwhelm, seasonally positive or negative flows. But barring some sort of major event, these flows tend to have actual reasons behind them where markets are forced to put money, fund managers are forced to put money to work at certain periods of the time for a variety of reasons. And then if you can understand that, I actually think it's part of technical analysis, because what technical analysis is, it's the study of supply and demand in the marketplace. Well, if I can tell you, and we knew this last week into the sell-off, if I can tell you that based on, a Goldman Sachs model at certain price points in the S&P and the NASDAQ on the way down, or at certain price points on the VIX, it will force certain systematic funds to have to sell, or in other cases have to buy. Last week it was forced selling. Then that provides you a tremendous amount of information. Wednesday of last week was the first time in a while that some of these major downside trigger points got hit that forced a large degree of selling from vol control funds, and also probably to some degree CTAs. I should get an update on CTA numbers tomorrow. But we saw this morning that I think there were $56 billion of outflows from vol control systematic funds. And most of that happened in the back half of the week. that's just forced systematic selling that has to come in because the VIX hit certain levels. So if you can understand that, and you can understand that these certain prices lead to feedback cycles of selling becoming more selling or buying becoming more buying, that's very, very powerful information. And it's the same understanding when it comes to seasonality. August tends to be a month of outflows. I've already seen reports from Goldman that are modeling, I don't remember what the number is, but are modeling more outflows, I think, in August than any other month so far for this calendar year. And then on top of that, what I said, so what does that mean? We have to break that down. Well, what it means is if you are selling the S&P, 25 to 40% of that selling is going to be in the top 5 to 10 companies. Well, what are the top 5 to 10 companies? They're the Magnificent Seven companies. So if there's going to be a degree of forced outflows and we know this information, then it makes it very hard to be, overly bullish on Mag 7 stocks, and therefore enables the rotation to potentially continue. So it's just one of a lot of dynamics that we're paying attention to. The gamma levels are another one. That massive positive gamma that was having such an insulating effect on the S&P really rolled off post OPEX and lowered and lowered and lowered as the market went down, which just enables the market to move even wider, and it enables the market to have even bigger intraday ranges. And that's just exactly the environment that we found ourselves in last week, and it was really exciting.
Yeah. So, you and I do these videos together, and then afterward I, edit them, cut them up, whatever. So I listen more to what you're talking about, what you're saying. And I think one thing that really stands out to you as a trader, about you as a trader to me, sorry, Derrick, is that you truly do really love this. You get really excited talking about the market. You're not just, you can tell this isn't just like, okay, I'm going to go to my job, make my money, go home. You really love the market. What is it about this career that just made you really fall in love with it and makes you excited to come to work every single day? Because you're doing a lot more work than just 8 hours a day at a desk and then going home. You got to really love this, I think, to do what you're doing.
Yeah, no, I'm doing 11 to 13-hour days. This morning I started my process, especially because I'm doing this thing in the virtual trading floor, so I wanted to make sure I was extra prepared with all my information. So I got started on my process about 5:15 a.m. this morning, and I'm sure I won't be done until 7 o'clock plus this evening, when all is said and done and I'm caught up on email and everything. But I, for the most part, genuinely love what I do. It's such an exciting, dynamic game, for lack of a better term, that I'm involved in. Every day is a new, unique puzzle. It's constantly evolving, and there's so much to learn. I've been doing this professionally for 15 plus years now. I'm learning new things all the time. A lot of the stuff that I'm describing about market structure and how and also how important that's actually become to my overall trading, that's all relatively new stuff to me in the last several years, and it's stuff that I'm still continuously learning. And part of that is because the market evolves also. The market forces you to learn new things. When I got started trading, zero DTEs weren't a thing. Now zero DTEs are a thing, and I have to be asking myself, even if I don't trade zero DTEs, I have to be asking myself, what is the market impact of zero DTEs being in existence? Because there is no doubt in my mind that the advent of zero DTEs plus the amount in which they are traded has impacted the way in which the market moves. Or all these they're, I feel like, primarily marketed towards retirees who want cash flow, but all of the vol selling like ETFs and products that the big banks have created, well, that has an impact, especially when you start raising billions and billions of dollars coming into these products. These products have an impact on how the market moves. If I'm a trader, I'm out here doing this for a living. I've probably executed 50 trades since we've been talking. I need to understand how those new products are going to impact the market, because it's having a massive impact on the market. The huge dispersion trade that we're seeing with 3 stocks in the market higher all year, and then Thursday 2 weeks ago, CPI triggering this massive rotation and massive move from the market. I don't think that could have happened in the same way just a handful of years ago before all these vol selling products started to exist. So you have to be constantly studying market structure, because if you don't understand the impact that all of this now forced vol selling from these products is having on the market, then you don't understand why 3 stocks have led the entire move higher and nothing else has participated. And then, I saw my dad last weekend, and my dad was like, "Oh man, were you okay from the market sell-off last week? It looked like a really big market sell-off." I was like, not only was I okay, my longs all went up, because even though the market had like a big crash last week, that my dad obviously saw in the headlines and on the news, 68% of New York Stock Exchange stocks went up. What kind of sell off is that? That's not a sell off, but that's, again, there's a structural reason behind how the markets have developed to where they are today that has enabled that first half of the year trade to occur, and then has enabled this rotation trade to occur.
Yeah, great. All right, let's quickly talk about the economic data coming up this week, because it's not just a huge earnings week, it's a really big week for the economic calendar. So to look at everything, that's kind of the highlights of what's scheduled. The big things I would say are JOLTS tomorrow, and that's been a market mover. ADP's private employment report on Wednesday, but really the Fed meeting on Wednesday, that's the important one there. And then the July jobs report on Friday, which the Fed is, of course, paying attention to get themselves ready to cut rates. There's a lot of talk in the past just like week that this week's Fed meeting is live for a rate cut. I'm not sure I would personally agree with that. The market is really saying September is a definite thing, but now there's all this talk about this week being in play. What are your thoughts?
Sure. So the big events are the Fed and the jobs report on Friday. In some ways, I feel like the jobs report on Friday is actually going to be the most important one out of them. But the Fed on July will be important.
I would agree. Yeah.
The Fed will be important because the market's going to look towards further clarification on when cuts are going to occur. There's not a 0% probability that the Fed is going to cut this week, but it's pretty low. But at this point, the market's pretty much pricing in 100% probability of a September cut. So the market is going to be looking for language from the Fed that kind of confirms that is going to occur. And then whenever you're dealing with the Fed, or whenever you're dealing with any of these economic numbers, it's surprises that move the market more than the numbers themselves. So the question for Wednesday for the Fed is, will they say anything that surprises the market? Will Powell come out and be maybe way more hawkish than the market expects, and still say, similar to the last time, the last Fed meeting, where he says, yeah, probably no September cut, maybe by the end of the year? The market's not expecting that at all. So if that were to happen, that's something that could actually create a much larger, bigger move. Personally, I'm not expecting any surprises, but you want to be prepared for those outlier situations for when those surprises can occur. And then the jobs number is going to be huge, and it kind of goes hand in hand, I guess, with the Fed. I think that the Fed will say that their their dual mandate, has kind of become a little bit more in line now with inflation coming down, but jobs are also beginning to show a little bit of weakness, but yet there's still actual job growth that's occurring. So that then leads to the Friday number, where we will see to what degree, if any, the job market continues to weaken out, and we will see whether or not the unemployment rate actually ticks up. There's been a lot of chatter about one of these economic recession indicators. I forget the name of it off the top of my head, potentially being triggered on Friday if the unemployment rate hits a certain point, which is something to be aware of.
All right, great. All right, so a big week of earnings. And remember, everyone, we're getting Mag 7 earnings over the next 3 days, and then a big week of economic data with the Fed and the jobs report. So today might be a little bit of a lull, but I feel like we'll get a lot of catalyst in the days ahead for some trades. So it should be exciting for you, Derrick, and exciting for everyone who is in the ProDesk virtual trading floor with you for free this week. Everyone who's with us live, if you would like to join Derrick, he's got the rest of today and the rest of this week, he's hosting an open house in his virtual trading floor. That's his live trading room with T3 Live, the Pro Desk virtual trading floor. You can go to t3live.com/do live to join that open house, trade with Derrick. He does a morning meeting where he gives lots of insight. You do a market wrap every day, right?
Monday through Thursday.
Monday through Thursday, a post-trading meeting on YouTube. So you're getting lots of insight from not just Derrick, but also other professional traders with T3 Trading Group. They all trade within the Pro Desk virtual trading floor. So you do get lots of insight from them as well, lots of ideas. Derrick has been trading this whole time while we've been talking. So he's an active trader who's really doing this every day. So I'll let you get back to that, Derrick, and have a great rest of your day. We'll see you next week.
Thanks, Greta. Appreciate it.
All right, bye.